us today and giving us all those details. With that, let's move on and talk about Sharda Cropchem. In a recent note, Kotak Institutional Equities states that global crop prices have softened in recent months. In India, IMD says rain deficiency will get covered in July. Now remember, Sharda Cropchem has a sizable exposure to export markets, be it North America, be it Latin America and Europe as well, and a very small revenue percentage coming in from Indian markets, less than 5% actually. But to understand and discuss the demand outlook, we have R.V. Bubna, the Chairman and Managing Director at Sharda Cropchem, joining us now. Mr. Bubna, good afternoon, sir. Thank you so much for joining us. Always a pleasure speaking with you. I wanted to understand, since there is a fall in global crop prices, what does it mean for demand for agrochemical products, for products for the company? And is it something which is expected to continue, the fall in global crop prices? What is the demand scenario right now?
Madam, I cannot comment too much on the global crop prices, but I can only comment on the agrochemical prices. The agrochemical prices are looking up. The pace is very slow, but we have passed that bottom that we had gone through at the end of last financial year, and slowly the prices are going to pick up. The demand is picking up, and the demand is picking up in all the territories. So it is a very good sign.
What about, right, Mr. Bubna, good afternoon. First of all, thank you so much for joining in. I wanted to ask you about the geographies as well, since you have a majority of your business coming in from exports. What are the trends that you are witnessing on the ground, say in geographies like North America or even LATAM for that matter?
See, for us, North America and Europe are the main businesses. LATAM, our business quantity is very small. Both North America as well as Europe, the demand is picking up. Latin America also, the demand is picking up.
Okay. So what kind of growth levels will you see in FY25, Mr. Bubna? You know, we have seen the industry facing a lot of issues in FY24 and FY23. So on that base, are you expecting high double-digit growth? And what about margins as well? Raw material prices, wanted a sense of that. What will it make the margins look like in FY25?
Madam, we expect EBITDA to grow up to 15 to 18% EBITDA margin, and revenue should also grow from around 15 to 18%.
Okay.
But was the first quarter, this current quarter, the April to June period, better than what you had witnessed in the same period in FY24?
It is much better.
Right. And the last time
we are in the closing period now, so I am not supposed to comment much on this. But generally, it is much better than first quarter of 24.
Right. You know, the last time we spoke, you had mentioned about the higher sea freight impacting demand. What is the update you can share on that now? Because how are exporters like you coping with this? And has that trend of higher sea freight continued in this quarter as well?
The higher freight rates are also continuing. They are going higher, but the pace of growth is not so much. It is not affecting the industry and the business as so much because it forms a very small part of the total prices of our production. And all the price increase on the freight is being absorbed by the clients and customers.
Okay, I was just going to ask you that. Are you able to pass it on to the customers? Because there has been a substantial rise in freight costs since the Red Sea issues emerged as well. We had spoken in the last conversation that you'll see an improvement in working capital days. It was at 150 days earlier. In what period do you see working capital get stretched and when does it improve? What levels are you looking at right now, Mr. Bubna?
Madam, the working capital gets stretched up in the last quarter because that is where the business is growing and that's the best quarter for us. But in terms of otherwise, there is a very good improvement in the working capital days in the quarter one of this financial year.
What about CAPEX, Mr. Bubna? Have you earmarked a figure for FY25? If you could share that with us. And how do you plan on spending that CAPEX? Would you be spending some on product registrations as well this year?
My dear friend, our CAPEX is mainly on the registrations. We don't invest anything in the fixed assets. And the CAPEX this year is also estimated to be between 400 to 450 crores.
Okay, and that'll be all in product registrations, and you've spoken about how expensive that particular process is anyway. Last question before we let you go, Mr. Bubna. What is the product pipeline this year? How many products do you plan to introduce? And in the growth that you're talking about in FY25, will a lot of it come from new products itself, or will it be largely volume-led growth for you in FY25?
Madam, it will be largely volume growth, but the product registrations are also going to contribute. The trend is going to be the same as it has been in the past few years.
All right, Mr. Bubna, we'll leave it at that. Thanks a lot for joining in, sharing with us your views on the road ahead for your company. Wish you good luck for the rest of FY25 as well. That was the management of Sharda Cropchem as well. But time for a short break here on Midcap Radar. More on the market.